Great. So now that I have all of you captive, I think what everybody really wants to do is get down to the nuts and bolts of it, and really how some of the takeaways from the conversation that we've had, and we've had the two governments have over the last few days, is really going to turn into action. So, Sampa, let me in fact start off with you. And in your interactions, in your interactions with several of these companies, what are some of the real issues that are holding them back from perhaps now taking the next leap and making even bigger and better deals going forward?
So let me just step back. So I do Europe-India, which is not just UK-India. In May 2014, when people used to ask me what is the election results going to be, my only answer used to be that based on the election results, I'll decide whether I continue with this role or not. Because if the results were any different, I wouldn't see any investment really going in. So there is a lot of interest. Definitely there is a lot of interest. There are many, many more clients from Europe who are visiting India. There are discussions going on, but as we know, M&A deals take some time. So I think that is where we are. We have seen a few deals coming through, and I think the pipeline is very, very robust. So in the next couple of years, we will see a number of transactions happening.
All right. Let me take that forward with you, Sanjeev, because as Sampa said, there was perhaps a little bit of a shift in trend in the last few years from those big deals, slowing down a little bit to perhaps a smaller, more nimble deals. Do you see that trend set to shift again?
Well, let me just put it in context for a moment. So we, over the last 5 years, have worked with a number of Indian companies. We've probably advised on about $25 to $30 billion of investment in the last 5 years. Now, those have been the big names, Tata, Reliance, etc. But what doesn't get as much press coverage is the mid-tier companies who have global ambitions. They don't just want to be national champions. They want to be global world beaters. What they really need is liquidity and capital. They need to be able to get investors to back them, to back their story, to be global. That's the restraining factor. And it's both ways. It's not just about India's restraints. It's actually about the international restraints for investors as well. So it's actually maximizing the capital from both sides and getting the partnerships to work. But I do think that the trend will be for mid-tier companies to grow more quickly than we've seen the global companies grow.
All right. In fact, I want to bring Kim in on that, because I know that's what you were, in fact, telling me just before the session, that you're seeing a lot of that activity in some of the mid-tier companies that you've interacted with as well.
We do, and I think you're absolutely right to raise the investment and the capital perspectives from the perspective of mid-sized businesses. But again, most of my experience is really with SMEs, mid-sized businesses looking to go to India and indeed looking to come from India. And while the big picture is fantastic and the governmental support is going to drive an initiative in and the government encouragement is there to be seen, I think, as the last speaker said, it comes down to some of the activities on the ground to enable things to happen. And I think one of the issues that we still have to do to make it easier for the smaller companies to transact with each other is to help them understand the opportunities and how to reach them. If I sort of typified the conversations I've had with my clients over the recent years, they have a degree of an awareness about the opportunities India affords it. They do not have much of a depth of understanding as to how to then do something about that, how to find their point of entry, how to find the bit of India that is relevant for their particular goods or services, how to go to find a partner in an M&A transaction. And that's where it comes down to activities on the ground by partly the government agencies, partly the professional services, partly the capital markets and private equity world. I think it's taking these businesses from an awareness to an understanding and a how-to, and making that work far, far more cohesively. It's still very hit and miss. There are still myths and mysteries, some of which are real and need to be overcome. Some of them are just not true. You just have not got to speak to the right people to help you overcome that particular issue. The more that we can do to clarify the means to that end, the better the mid-market will be. And I think the mid-market, when you think about the large corporates, we should really focus on the supply chain into the large corporates. And that is where I think both the UK has a huge amount to offer in the sectors that the previous speaker addressed, and vice versa. UK opportunities for Indian corporates.
Okay. Nikhil, you of course have a crucial role to play here as, as head of the LSE, and I want to understand how things have also changed from your perspective, how you are seeing perhaps greater facilitation in access to funds for some of these companies.
I think this year has been quite a remarkable year in terms of the awareness in the international investment community of opportunities to invest in India. During the course of the year at the London Stock Exchange, we have had visits by Minister Jaitley, the RBI Governor, the Railways Minister just a few weeks ago. And each time the interest level from investors in terms of investing in India has been increasing. And I think we saw that last week, such that companies, a number of big-name Indian companies, had the confidence to announce that they would be issuing through the London markets, in many cases, global first issuances. For example, HDFC doing the first private sector masala bond, the railway rupee bond. So I think we are seeing the institutional investor community really waking up to India. The fastest growing economy in the G20 this year, expected to be the same next year, a very positive demographic story, and very, very exciting returns.
All right,
Can I just add 2 points to Kim? So one of the other things which I think we tell all our UK clients as well as the European clients, that when they say we want to invest in India, you need to understand India is very diverse, right? So where do you want to invest in India? The way the business is done in the south is very different from the way business is done in the north. And I think that is where issues come up, especially if you're not very sure which part of India you're going to and what sort of cultural issues you need to tackle, that it becomes an issue. The other thing is which sectors. So when we are talking about investing in India or investing in the UK, I think we need to figure out which are the sectors which are strong sectors in both the countries and then tackle those sectors, because those are the more low-hanging fruits where deals will happen.
Absolutely, and I'm going to ask you what some of those sectors are as well. But just to further that as well, Sanjeev, I want to understand what some of the key roadblocks are. When we've had Sampa and Kim talking about really access, finding the right partners, really understanding the Indian market, even in terms of regulatory hurdles, legal issues, what are some of the roadblocks?
I think you need to start from the perspective that we talk about intelligent capital. I think what you need in India is patient capital. I think, it is the long haul. It is an opportunity too large to miss. Investors have to ride out the smooth and the rough. And you need to accept that the reform agenda will take time. There will be difficulties, there will be challenges, but you work with the system and not against it. So there are many roadblocks, and we could spend the next many hours this afternoon talking about each of them, but it's your approach, it's not the roadblock, it's your determination to partner with the people you need to have the right relationships on the ground and have the determinations to see through those challenges.
And you still see that intent shining
Absolutely.
through. Yeah.
With small corporates, large corporates, with private equity houses, with bond fixed investors. I mean, you have to have the spirit to do it, and if you do, then you will win the reward at the end of the day.
I'll just make a comment, though. I think the sector point is absolutely critical, but again, I think it's come up particularly in the earlier discussion in respect of financial services in the City of London. But country to country soon comes down to city, and if you can find sector and city congruity, then you can actually find real means to identify people to do business with, how to overcome the issues. So I think the combination of sector focus and priorities and understanding the relative city strengths that the UK and India would have starts at least giving you the platform of knowing you're going to the right place, and in an infrastructure that can hopefully point you, or help, as you said, help overcome the roadblocks and point you to the people you can do business with.
Thank you. I think I can echo that point. I certainly hope the city has much to offer India, and one of the phrases coined last week was "Made in India, financed through London," which would be fantastic if we saw that more often. I've never seen a London Stock Exchange bond cheered by 62,000 people at Wembley Stadium before. But to Sanjeev's point, I think one of the interesting things about last week was the breadth of sectors in which we saw announcements. So we saw, of course, the financial services announcements, which we were involved in. But if I look at our listed companies, telecoms, pharmaceuticals, genetics, many technology deals, theme parks, entertainment, education. So this is a trading relationship which is becoming very broad indeed. And I think that is a really positive sign.
What about deal financing as well, Nikhil? What are the trends there? Are you seeing a shift in that going forward as well in what you're seeing in terms of what companies are looking for, given what we've seen in terms of the change in the economic environment? Sanjeev is also nodding, so you could take that then.
Well, I think let's start with where we are in terms of the debt markets in India, which is a mixed story. I mean, about 5% of the bank loans in India are non-performing. Add to that Basel III, capital costs, the need to recapitalize. The bulk of lending in India is by public sector banks. So you need to create a capital markets, which Nikhil and his friends are doing a good job at, but you also need to revitalize the banking system. And access to capital can't just be for the big names. It needs to go through the capital spectrum down to the mid-tier companies that we're talking about, because they will fuel growth. They will be the trading partners for the rest of the world. Capital needs to find its home across the different corporate sectors, not just at the top.
Right. Let me bring you both back in here as well, Sampa. When it comes to financing, are you finding that the needs of industry has changed as well? We've seen a lot of companies that are now looking at deleveraging, for example, working out certain balance sheet issues, smaller companies that may have different needs to what we've seen in earlier years with regards to those big ticket deals. What are some of the observations that you've seen?
So one of the things which I think, when we look at outbound from India, the main sufferer has been because most of them, there has been a debt overhang there. And that is where they need to first figure out what do they do with their own balance sheets before they are looking out. And also some of the financing that is available in Europe is very different to what they are used to. They are used to more of equity as well as just, as Sanjeev said, it's just bank loans, that's about it. So exposing them to different structures, that is very interesting, and they are quite quick in getting up to speed on it. So it's not that there is a lack of I think it's a lack of knowledge which needs to be, they need to be educated on.
Kim?
I think if from the perspective of some of the UK SMEs that I'm working with, what I've been surprised about is how some of the ventures they can enter into India can be relatively low cost to certainly get through the exploratory stage, to identify a trading partner, to start to take their goods and services out. And thus far, they've been able to finance that from their UK debt providers. I'm also quite interested to see how more UK private equity houses are now probably actively encouraging their portfolio to look to overseas markets, and India is one of those markets, for a whole host of reasons of confidence and know-how. I haven't yet experienced too many of those SMEs, when they get to India, find issues in funding the fast growth of their businesses in India. I'm hoping that the India banking sector, as I think we've heard in terms of the bonds being raised here to allow investment back in the projects in India, will actually make that easier. I have a fabulous example present where a really small UK company I'm working with is chasing, in the Indian rail infrastructure world, a project that could be $800 million worth of business to them. They are currently trading at less than 5 million turnovers, an enormous step. And it shows two things. It shows the potential scale of some of the contracts for British businesses in India in some of these infrastructure worlds. But it does address this question, well, are they going to be able to fund that as a contract when it kicks in? But I'm more optimistic now than I would have been a handful of years ago that that is capable of happening.
Do you see an improvement in the conditions at the moment?
I think this point of scale is a very powerful one. I mean, there are many different estimates out there in terms of what India's financing needs will be for infrastructure, ranging from $750 billion up to $2 trillion. But the scale is extraordinary. And as Sanjeev said, the fixed income markets are an important part of that. At the moment, they're not as developed as they need to be. I mean, issuance last year was around $68 billion, which isn't going to provide the supply of finance that's needed. But I think that is changing. I think one of the things that's been interesting for us in the last year is it's not just UK private equity houses that are showing interest, but even UK pension funds who can't get particularly high returns by investing in assets here in Europe, seeing the potential returns that you could get from infrastructure investments in India, and are examining these. And these are long-term investors. I think the other dimension to this, as well as stabilising the banking sector, one of the challenges India has is its own domestic savings pool. And one of the things that have been worked on in the India-UK financial partnership is helping to develop a long-term pool of pensions savings and long-term pool of capital within India to be able to channel domestic savings within India into infrastructure. And that's an area where, again, I think the partnerships announced last week can help.
Interesting. So clearly infrastructure once again becomes one of the key priority sectors that we're seeing a lot of activity. And Sampa, you said that momentum's going to pick up. You alluded to that. Give us a sense of the kind of deals that we can look forward to seeing, you know, a little bit more perhaps on the kind of industries or the deal sizes. Give us a sense of what we can expect.
So I think manufacturing is a big push. So I see a lot of UK manufacturing companies going and setting up shop in India, or at least looking for partners in India. And what they look at India, it's not just the domestic market. The domestic market itself is big enough, but they are looking at India as a regional hub for the Southeast Asian market. And that is a trend which we are seeing more and more. And if that picks up, then there'll be a lot more activity between UK and India.
Okay. And in terms of, you know, outbound, inbound, is there a fair mix? Is there a balance? Do you see more one way or the other?
My own experiences in the last sort of handful of years would be more UK businesses looking to explore India than me hearing of Indian businesses coming to the UK. But I'm particularly encouraged by the number of trade missions that I am seeing. I have a concern of their proliferation and duplication, but nonetheless, the number of opportunities to take British businesses into India to explore, and now the opportunity to bring some Indian businesses to the UK to explore, generally sector-driven opportunities. I think that is very encouraging. When you look at the statistics, though, I'm still not impressed when you look to see there are, and again, the statistics vary, 600 or so Indian businesses that have UK operations and 800 or so in reverse. In the scale of companies there are in the UK and in India, that is a minor proportion. And I think, as was alluded to earlier, the statistics are horribly skewed by the Tatars and the Mittals. Horribly skewed, but nonetheless an enormous step forward compared to a few years ago. But that says to me there is an enormous opportunity in mid-corporate UK and mid-corporate India to explore the mutual opportunities with each other over the years ahead. We barely started.
And
no, I echo that. I think there's a lot of pent-up demand. We see that in our own pipeline. I think sentiment is a big part of whether people make that move. I don't think it's a question that they won't invest, it's a question of timing. And I think you have to add to that the fact that you need liquidity, you need capital, you need debt funding. All of those combinations have to be at the right time for you to make that move. And also politically at home, in terms of India, once things are stabilized, again, that gives the confidence for companies to go outbound, seek new investments once they know things are fine at home.
Has the situation also been uplifted by the fact that in the current global scenario, India is still standing out, given what we're seeing in growth in various economies? Has that also helped to really boost flows in that direction?
I think it has, probably more for people like the fixed income investors who are probably a bit more swayed by those movements, rather than global corporates who know that they need to invest in these markets and are waiting for the right time. So I think you can't make a generalization. You have to think about the investor and why they're investing in India.
And I want to come back to the focus on the mid-tier companies for a moment, Nikhil, because you've actually seen a lot of that. You've actually had a fair share of examples as well of companies that are looking to tap the UK and London specifically as financial services. What's the kind of opportunity you see there?
Well, I think for mid-tier companies from India looking to raise capital here, there is quite a sophisticated investor base here that's used to assessing valuations for those companies and supporting those companies over the long term. So we have over 55 Indian companies on our market. A number of those are mid-tier markets, and they've had, broadly speaking, a good experience here. I think where we need to take that next is as some of our colleagues on the panel have said, taking that to mid-tier company trade across border, where we probably haven't cracked that yet, and that's where I see the next priority. I think the other thing which I think is important, and going back to one of the earlier points about Indian companies coming to London to raise capital, is yes, some of them are doing it because they want to use that capital at home, but actually many of them are doing it because they are wanting to go global, and they want to connect here in a global financial centre with the profile it gives them, because their ambitions are very, very significant.
So I want to also now voice.
Can
let you
add
finish
to
that point. Yeah.
Because there's another thing which I'm seeing in the trend from outbound to India, that I'm now meeting most of the second generation in India, who most of them have been educated abroad or been abroad and understand the global values. So they are all looking to set a step in the global market. And that is where we see more of outbound coming up.
Yes, absolutely.
If I could make what might sound quite a strange connection, it goes back to the point of awareness and understanding. It really picks up on the comment there, though. There was a recent study done by Mori, which are trying to evaluate the degree by which young, educated people in the UK and India understood the opposite market. And it was a very disturbing result, because it suggested that 74% of young, educated Indians had a very good understanding of the UK and its markets, and yet only 24% of the UK counterparts had an understanding of India. So again, what I was so pleased to hear last week, and again I think the previous speaker talked to or addressed, was the concept of education, the concept of getting our young people aware and involved and engaged, be it through education, be it through internships. There are some fabulous initiatives being announced on the back of last week, which is addressing this, getting the young people of both these countries, business people of tomorrow, business leaders of tomorrow, aware of this special relationship and these market opportunities. I love a word I've read a lot this last few weeks about our relationship. There's a word called profound. If you look around global relationships, bilateral relationships between many, many companies, you can't apply that word profound to too many. And if that is the sort of sentiment that applies, and I hear it in the UK, and I hear it when I go to India, about the possibilities and potential for UK-India business, then I'm incredibly encouraged, and I would just love the education and the awareness of our young, emerging business people, professionals, engineers, teachers, or whatever, to be equally excited about that future.
You know, Sampa, you mentioned earlier that, of course, you look at all of Europe, but put the relationship between UK and India into context with us. I mean, so much focus on that in the last week or so. So tell us why it's significant.
When I talk about Europe and when I go and meet clients in India, and if I ask them that, which is the preferred destination, they definitely come up with UK. There is no doubt about it. I think there is an affinity, there is an understanding, there is a, they feel at home over here, and I think that's more important. Frankly, I mean, none of them want to go and do business in France because they don't understand the language. They are scared about the, labor laws there, etc., etc. But UK is literally like a second home for them.
So that's what I actually want to bring up next, and it's the one sentence that one kept hearing, or phrase that one kept hearing and keeps hearing, is the ease of doing business. And it seems to have become this sort of big fear amongst several companies or individuals that are looking to work or partner with Indian companies. Have things changed on ground, Sanjeev? Are we seeing a difference? Intent is one thing, but there's, a lot of the critics, particularly, that are perhaps watching back home, have this one question. What is the kind of change we're seeing? Is it reflected now when actually people are interacting and trying to take things forward?
Well, I mean, the World Bank thinks it's changed.
Yes, by just about 6 positions.
So I think the sentiment is that things are changing, but it's not going to happen overnight. There's a huge bureaucracy. You're dealing with central laws, state laws. You've got a whole matrix of different issues to navigate, and clearances and labour laws, etc. Yes, it will change, but it will take time. Right. But at least the direction of travel is the right one.
Well, we've seen that as an example. Just take the Vodafone example, and a company that's willing to continue investing despite the huge overhang of the tax tussles there. But going forward, I want to really understand what brings about that positivity, that confidence, that it's still a place to go and put your money in. And I want to get some of those key takeaways from all of you.
Let me just carry on the ease of business for 1 second and follow on to your question. What you have to remember with India is the quality of management in these companies. They're best-in-class management. So when we talk about ease of business, we're talking about the pain and headache of clearances. We're not talking about having to try and upscale management as you do in other growth markets. So what would you rather have? An easier clearance system with bad management, or good management with a headache in terms of clearances? And also, actually, some of our clients see these obstacles as a way of actually them getting a competitive advantage into these markets.
Right.
Because if it stops others, it means that they have a pricing advantage. So one has to take the end game, look at what the opportunity is, which is good management in India, best-in-class companies which want to be global. And yes, there's a headache with getting clearances, but so what? There's lots of things that give you a headache.
All right.
Yeah, and I totally agree with Sanjeev, because whenever we have taken global clients to India, I think one of the things they have always come out from meetings and said they talk the same language, which is a fact. And that is a huge thing. I mean, that really breaks the ice, because they are talking the same language. So they know what they are talking about. And yes, everyone understands it's an emerging market. It's still an emerging market. And it will have issues. But long term, it's a huge market. Can you really ignore it? And that is the big question everyone needs to ask.
I really do think, though, there's a big difference of scale. I think you're absolutely right when you're talking about substantial, if not global businesses. Substantial businesses, by and large, will have well-established management teams. They will have the necessary investment into infrastructure. Again, if I go back to the mid-sized corporates I work with and ask them, these are ones that have tried and failed in India. Why did you fail in India? It was because they could not find the right person to run their business for them. We're talking about a greenfield start. How to find the right person, how to find the right person that fits into the culture. Probably more importantly, how do they need to adapt their culture to succeed in India? So that the cultural piece kicks in, finding the key employees. Don't just ship a Brit across. Find your key Indian management is a big, big issue. The point about regulation is there, but it's a matter of fact. It is a matter to be determined as to whether you can or cannot trade, or whether you can or cannot trade through a wholly owned subsidiary or a joint venture or what have you. That's thrown out as a barrier, but it's actually an easier one to address than finding the right resources. That would be, I think, a difference in scale of the corporates.
All right. Nikhil?
Well, I think there have also been some quite concrete steps as well to make life easier for businesses wishing to invest in India. We spoke earlier about the FDI caps being raised, which for a number of investors will just take away one of the hassle factors that they previously had to deal with. And in terms of key takeaways, I wouldn't underestimate how powerful it is to have a Prime Minister and a series of ministers who are incredibly confident and competent in the way they sell India to the business community internationally. When Prime Minister Modi was addressing the Guildhall reception last week, and he was addressing those companies that were in India, and he said to those companies that aren't in India, you may be wiser to be in India right now. And you could certainly see a few people clocking that and listening to what he was saying. And he was quite detailed in describing all the measures that he'd taken to try to make business make it easier for businesses to invest there. And I think that communications campaign, I think, is very powerful.
All right. I think we're almost out of time, but I just want to get just quick round of closing comments in terms of anything on your wish list and in terms of the reform agenda. We've just closed one very high-profile visit, but the next time we're sitting here, anything you would have liked to see development on?
I think there needs to be more reform and liberalisation of the capital markets to give access to the very growth capital that India needs.
All right.
I think infrastructure needs to be really addressed. I mean, if I can go back and do 8 meetings a day in Bombay, I would be very happy.
Thank you.
Mine would be a little bit about getting our act together. I think more I'd address that in the UK in respect of the support provided by the government through its various entities, UKTI, UKIBC, Chambers of Commerce, etc., just try to get all that energy into one direction and into one straightforward entity that UK corporates can explore and who can meet Indian corporates looking to come the other way.
All right. And finally, Nikhil?
I think just building on the capital markets theme, there are huge opportunities opening up as the offshore rupee market for bonds is permitted by the Indian authorities. I think the thing that will really make it kick off is some strategic planning at the centre in Delhi, looking at how that market can be developed with all the different public sector issuers that might be coming to the market and the foreign exchange regime that would support that.
All right. Thank you so much, all of you, for joining us on this panel and a great discussion trying to understand the way forward and some of the opportunities as well, particularly for businesses across the spectrum and also industries. Thank you so much.